Hello, folks, and there seems to want to be a lot of volatility coming up, but because not only do we have an expiry of monthly options, but we also have the quarterly expiry in options, and it's quite a big expiry compared to the regular monthly expiries. So, what's actually likely to happen? If you actually look at the expiry charts, you can look at September 25th, September 26th, big spike September 27th, not so much October 4th, very little October 11th, a little bit on October 25th, but just like about half, maybe less than half of what's today. And we have another big one at the end of December as the quarterly expiry. Now, this tends to spring a lot of action. Now, a lot of the action usually occurs about a week before this happens, but there might be a late effect, and it is $5.8 billion in quarterly expiry options, and this could actually mark price swings. Now, the thing is, the max pain level is $59,000, about $4,000 of south of where we are. We may not get to that price, but it's a max pain price, and that is what a lot of the brokers actually want the price to be, around that area or maybe even below that area by Friday. Now, will they be able to suppress the price to that point by Friday? I personally don't think so. But it would benefit them greatly to do so because the max pain price is 59K, and it is a price level at which option buyers suffer the most loss on an expiry, and those given the options actually get the most profit, which would be the fat cats. And fat cats want you to lose. Why do fat cats want you to lose? Because they're evil. No, but because they actually make the most profit. A popular theory in traditional markets often cites the max pain level as a magnet while heading into the expiry. That's because option sellers, usually large institutions with ample capital supply, trading the underlying asset to influence the spot price around the maximum pain point to inflict maximum losses on buyers. So, they're selling to you, you're buying. They don't want your buys to actually be worth it, so they're going to try to bring it down to that price. Now, I think some of the news recently threw a hex in the whole thing, and they are unlikely to actually bring it down by Friday. There is a lot of call options, which means the higher the price rises, the more people make on those call options. And because there are more calls than puts, there's more incentive on the call side than the put side, which means there's more people that want it to go up rather than go down. But that also means if the price drops significantly, then there's more people that are basically being pwned. And I think like a lot of the call options were being bought at 59 and 60,000. Some of the put options are probably around there as well. So if basically the big guys can actually get it to strike or the price to be around 59,000, then I think like both of those options will become worthless and they will benefit a lot. And the people buying those options will be kind of screwed, which is why they want that max pain effect. The max pain theory has been doing the round since 2021, although some believe the crypto options market is still relatively small to have a meaningful impact on spot price. So I've actually seen these max pain price points. A lot of times they do not actually follow those price points because I think like the retail still has a significant effect on the market and the big guys can't really control everything. But the max pain price is about $59,000. And that's what like the big guys kind of want the price to be when the options expire. So there is a chance we'll dump $4,000 into Friday. Not very big of a chance. My guess is we're much more likely to go to 65 than go down to 59. But look for there to be some volatility possibly before the options expire. I think we should actually go up because I think that's what the sentiment is telling me. But, there's a lot of there is a lot of big players in this, and it is a very, very big expiry on Friday. So 59,000 is the price to actually keep in mind if you see the price going down. I personally don't see the price going down, but it could definitely happen. So Justin Sun related USD or TUSD, maybe the SEC has just found to be a big fraud. And what they've done is that, by the way, it's not such a big deal because the market cap of TUSD is only $495 million. For instance, the market cap of Tether is like $118 billion. So this roughly has 250 times more supply than Tether has 250 more times more supply than this. TUSD isn't a very big stable coin, so it doesn't really affect that much of the market. And it is still at 0.999. So the news hasn't affected TUSD. But the SEC has actually done some good research, and it reveals the risky investments behind TUSD stablecoin. So yes, it is risky. And they revealed that nearly all of TrueUSD's reserves were invested in risky offshore fund, leading to charges against TrueCoin and Trust Token. Here's the thing, this is a Justin Sun affiliated stablecoin. So I don't know if he's really in trouble or not. And this stablecoin actually got ditched by Binance several months ago, maybe when some of this stuff came out. And it's a good thing that Binance did ditch them, because they actually, TrueUSD actually like lost a lot of its supply, which means it can't screw over that many people if it goes kaput. So that was actually a good thing that Binance did. So the SEC revealed that nearly all of TrueUSD's reserves were invested in a risky offshore fund. Now, a USD reserves are supposed to be invested in like dollars, treasury bonds, and things that are secure, not in risky offshore funds. But this might be just one of these Justin Sun things. I don't actually know if he runs the stablecoin or not, but he's definitely going to be involved, and this might not bode well for him. So the US SEC revealed that TrueCoin LLC and Trust Token Incorporated, the creators of TrueUSD stablecoin, had invested almost all their reserves in a high-risk offshore fund. Obviously, this leads to charges of fraud and unregistered sales of investment contracts, because if it's like in USD and Treasury, it's not really an investment contract. People generally don't invest in stablecoins to actually make a profit, but it looks like they are trying to make a profit off of this and not telling their users, which is bad. According to the SEC, TrueCoin and Trust Token falsely claimed that TUSD was fully backed by US dollars. Obviously, if they're invested in risky offshore reserves, they are not fully backed by US dollars. From November 2020 to April 2023, the company sold TUSD through their TrueFi lending platform, advertising it as a secured dollar-backed investment, which was a lie. And it exposed the investors to significant risks. And of course, by March 2022, which is about halfway, more than $500 million meant to back TrueUSD had been diverted to this risky fund. So he was using people's money to try to make money in a risky fund, kind of like SBF, but not quite as bad as SBF and not nearly as big as SBF. Of course, they had decided to settle. By 2024, by September 2024, when this story broke yesterday, a staggering 99% of TUSD reserves were tied to the speculative fund. SEC Acting Chief of Crypto Assets and Cyber Unit Jorge J. Terino stated that the company sought profits while endangering investors' capital through false claims about the stability of the investment. Responding to the SEC's findings, both companies agreed to settle. They will face penalties and are barred from future violations of securities laws. TrueCoin will pay $340,000 in disgorgement, which is actually very, very little compared to how much they were risking, with an additional $31,000 in interest. Pending court approval, both companies have agreed to pay civil penalties of $163,000 each. So if you are looking at TrueUSD as your stablecoin of choice, you need to get another stablecoin of choice, because it is not dependable and it is generally not a good stablecoin to trust. And yes, this was kind of like a Justin Sun related stablecoin. So definitely TUSD was actually proven to be a fraud. This is one of those things where it's like, hey, good job, SEC. They actually did something right. Instead of going after things that weren't frauds, they actually went after a fraudulent stablecoin. In other words, Charles Hoskinson, the glorious founder of Cardano, has slammed Ethereum. He's called it a dictatorship. Now, Grand Lord Charles Hoskinson has actually a lot of effect on Cardano as well. He has a lot of influence. But remember, Cardano just had the Chang hard fork. And that means the community is going to have more say. So I think he's milking it for all it's worth right now and saying that, hey, we have this voting system in place. It's better than what you have. Even though he does have significant influence over Cardano now. In truth, Vitalik does not have supreme overlord dictatorship powers over Cardano. That's not the case. It is actually decided by a council, but also people have vested their trust in Vitalik because they actually want him to be making the decision. So I'm not really sure how much you could actually say about that and how much they're actually doing wrong. In fact, like it is kind of a really touch and go situation there. I do think Ethereum users do actually have a say, but with the structure of Ethereum voting, Vitalik ends up having a lot more influence and power than is would otherwise be necessary. But maybe that's not necessarily bad. Plus, like there's a developer team that also has influence on the decision. So while it's not really decentralized decision making, it's not truly a dictatorship either. Charles had tried to backtrack some of his contracts, saying that Cointelegraph misquoted him, but that is just generally like more of just the usual Charles stuff. But he is saying that Bitcoin is an anarchy, which I guess a lot of pure Bitcoiners like. Ethereum is actually a dictatorship, and Cardano is moving towards a democratic type of governance. Now, Cardano is definitely not there yet because ADA still has ways to go before Voltaire is fully implemented, and the Chang hard fork was only the first part of Voltaire. But they are going towards that, and he is trying to flex a little bit with Cardano's new democratic type of system. BlackRock actually made some interesting comments about Bitcoin. They basically said Bitcoin is not a risk-on asset, and it actually makes a lot of sense. Indeed, it makes a lot of sense because, risk-on assets actually are correlated with certain things like, economy, and other certain like macroeconomic factors, which a lot of times Bitcoin does not seem to be kind of like affected by. Now, to be fair, Bitcoin seems more correlated with the stock market in the recent days than any time else. But they do actually have a point in terms of like Bitcoin's really not correlated with all this stuff. It really just follows the 4-year cycle. So you can't really call it a risk on asset. Now, Bitcoin obviously is affected by what Jerome Powell says. And in this specific instance, usually it's not. But there are factors that affect Bitcoin that usually don't affect the all-traditional market. So the BlackRock guy is saying you can't really consider it a risk-on asset. Would it be considered a risk-off asset? Not really, because it doesn't move the opposite way either. Bitcoin is just kind of like an asset in its own class right now. I think it is more like a risk-on asset at this point because it is so much more correlated with the stock market the last couple of months, and I think it will move towards that area. But BlackRock saying it's not a risk-on asset probably will get more people to invest in the coin, which I'm fine with. Now, BlackRock still says it is a risky asset, but being a risky asset is not the same thing as being a risk-on asset. Definitely two different things. Figure out the difference if you haven't figured it out already. I think it will be beneficial for you to actually know the difference between these two kinds of assets. Also, Bitcoin's price, a target price, has risen somehow to 78K after the Chinese stimulus package. Now, as I said before in streams, the Chinese stimulus package is actually more targeted towards getting people to buy more property and real estate than it is to buy crypto. So I'm not really sure how they ended up with this kind of conclusion. So Bitcoin looks ready to undergo a substantial breakout towards 78K in the coming weeks, primarily due to price chart technicals in China's latest economic stimulus. The economic stimulus really involves like lowering interest rates and giving more people better deals on property, but it's not going to really solve their problem. And the People's Bank of China announced that it would inject around 140 billion of liquidity into the financial system by cutting the reserve requirement ratio by 50 basis points. The PBOC has lowered borrowing costs and eased property purchase rules to shore up its struggling real estate market and wider economy. But it's mainly for real estate. But some people might actually take that money and invest it into Bitcoin, even though technically you can't do that. But I'm sure there's roundabout ways to actually do it. And a lot of the people in power, a lot of the money people will find ways to actually do it. Jamie Coots, chief crypto analyst at investment management firm Real Vision, argues that China's latest stimulus package is bullish for Bitcoin, pointing out that it would influence other central banks to follow suit. The U.S. Fed has already lowered its rates, and China's situation is kind of unique, and it doesn't really tie into a lot of other systems. They're losing population and they don't really have a way to counter that. And their social-based credit thing is kind of like falling apart because of that problem. The PBOC's recent stimulus packages announced have preceded huge rallies in risk assets like Bitcoin. For instance, PBOC injected 367.7 billion through reverse repos in October 2023, which Bitcoin went up massively after that, and 140 billion by reducing RRR by 50 basis points in January 2024. Both of those actually were followed by a big increase on Bitcoin. But of course, the January one was more because of the Bitcoin ETF afterwards. So you can't really say the Chinese stimulus did all of this, but any kind of stimulus in any country could actually get more buying in crypto. So it's still good news for us. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.